Patrick. Hello, Sleep. How's everyone doing? Hello, Amanda, Alex, everybody. Good day. Just want to start off with crude, a look from Grega. So looking for 3 to be completed up here, pull back to 56 and then another high. The reason I bring it up is I've been talking $62 for a long time, quite some time, well over a year, maybe a year and a half. And that was based upon a weekly chart while we were bottoming. So I'll just show it to you briefly. And I thought that might be it for this bear market rally in oil. Where are you, oil? Here we are. Okay. So let's go to the weekly, see if it's long-term enough. Okay. So this was last year. Everyone see it going into really almost 2 years ago now. This was the big swoon that we had in oil. Everyone see it? Give me a Y. All right, you know, y'all actually had kind of a throwover, but it was a falling wedge. And what's my rule for wedges? How much can they retrace? That's right. So what was the high of the wedge? 62.5. Okay, so we're almost there. Oh, did I have my webcam on, Steve? Okay, thank you, buddy. Yeah, something going on with my webcam. And so that's crude. So Greg is saying, you know, pull back, one more push up. Very possible that this might complete something. But with what's going on in the Middle East, maybe it's just a pause before a bigger move to the upside. So I'd be careful being long crude, you know, especially once we get to the 62 level up here. That's going to complete this whole objective. And look how long it took. But eventually the rule did play out. We retraced 100% of the wedge. So let's get to some currency action here before I turn it over to my teammates. So euro, I drew a line here yesterday in the euro. Just go to a shorter term chart. And we haven't quite gotten there. Shows up a little better on the 4. So to me, this still looks bullish. I'd be a buyer here. What down in this range, 1780. That's also a support zone on ForexAnalytix, as you can see. If you have the service, you could line up your work with the support and resistance lines that ForexAnalytix has. Just waiting for it to come up here. Come on, traffic light page. Okay. I'll have to get back to it. So they had something at 1790. So I still think that you being a buyer of breaks to this level, 1770, 1780, would make sense. You know, maybe you put a toe in the water here. I really don't want to hold anything into the NFP on Friday, but still believe that before we take out perhaps 117 for a stop, that was kind of the negated head and shoulders breakout. That would be a big warning that there's something very bearish going on if we got back under this pivot. Everyone with me? Oh, thank you. You wouldn't want to see me now. It's a nightmare. We're probably getting to do or die in cable here. Cable, you know, weaker than euro, but back to the support zone, getting oversold. There's still nothing impulsive, so there's still probably another move to the upside here. The Dixie, you know, I'm looking for, still think that we could wash out here. This low, the reading in the Dixie was 24. You know, really not a lot of divergence. When you get divergences under 30, they're not that attractive to me. So we could still get one more flush in the dollar. In fact, I think if we get a flush in the dollar, another rally in the euro, that it might even help the S&Ps recover for one more high. And then also want to talk about euro pound here, because this is a picture here. We're stuck between these two zones here. So far we put in a high or low, but shows up pretty good on the 1 hour that we're right at that moving average for the second time here. If we start closing over 88.55, I think it's an easy shot back to 89.80. I'm going to try and be patient just in case we still get a 3. Here's 1, here's 2, and there could be a possibility of 3. But I think it's pretty constructive that with the euro making a new low for the break, euro pound is not. So it'd be more bearish euro with euro correcting and going down, and euro pound already down here instead of up here. So this still gives me the bullish bias in euro, although I'm going to be patient, either wait for a breakout over these levels here. It looks like about 88.55 to 60. Prefer to see one more washout towards 87.40-ish, clean out these lows. And if the RSI stays above this RSI low, which was pretty glaring divergence at a 37 reading compared to the confirmed low that we had here at 29. So those are mainly my looks here. And I just want to point out something, that although the S&Ps have sold off dramatically, and that was something that Blake talked about, maybe the tax package is in, and Steve Olge talked about it. I just want to show you the relative strength and weakness in the indexes. So for me to have a 2-week reversal in the S&Ps, counting back 2 candles, the S&Ps would have to close under 2602. So that's still another 24 handles. But then really what's standing out to me is a Russell, because the Russell is almost there for a 2-week reversal. Here's IWM. As you can see, the 2-week off number in the Russell is right here at 150.95, and we're trading at 51. So the top pick to me, besides maybe the action that we're getting in Nikkei, which is pretty negative, and Steve's on it, seems to be the Russell in the US. Everyone with me on that? Pretty negative week in Russell compared to everything else. Any questions for me? I think I'll leave that for Steve. Midris, any questions for me? Okay, what is it? Okay, I can. In fact, someone was asking me about a 3 driver in it, and I didn't see it when they asked me, but I noticed it this morning. It's on the 1 hour. So I think this is what someone in the webinar yesterday was asking me about. So they saw this 1, 2, 3 as a possible 3 driver here. So if you believe in the trade, and sometimes this may not have been 1, there are little nuances with it. Maybe this is 1, this is 2, and we're getting 3. But if you're a believer in the 3rd drive and you think this is the 3rd drive, the way to approach it would be to buy it here. But since I'm bearish a dollar still, looking for higher Aussie prices, which is something else I did want to talk about. But there's your 3 drive. I'm just not sure this was 1 or this was 1, but the form is there. So if you didn't buy it here, the 3rd drive worked initially on the scalp. We're probably 61.8 back right now. You take a shot and you drop a stop under the 3rd drive low, about 30 pips underneath it, in case it just turns into this being the third drive. But as I look at Aussie, although we pulled back from that resistance that Blake pointed out up here at 76.50, when you look at the 4 hour, it's our second higher low, right? So this was our first higher low. It was a nice trade. Talked about getting long down here. This is another higher low, higher than this low. So potential does exist for another push up. We get back through resistance. We're going to the 77 handle or better. So this would augur for lower Canada if this is going to happen. If it washes out, then maybe Canada's going to pop. But I think it's somewhat impressive with as weak as gold looks that Aussie's been holding up a lot better than gold. I still don't see a buy in gold yet. There's nothing showing up for me in my work. I know people are real focused on it, but you know, it's a classic example of confirmed lows that we have in the gold. We're bouncing a little bit here, but this low was confirmed. I still see no reason to buy it yet. Maybe $10, $15 lower, something else will happen. So wolf wave, you know, I'm not familiar, Lena, with, I've seen people talk about wolf waves, but only wolf wave I know is, hey there, Little Red Riding Hood, you sure are looking good. That's the only one I know. So, Steve, how are you today, partner? I've been up waiting for the rooster to crow.
I'm good, mate.
Are you
How
there,
have you
Mr.
been?
Volge?
Yes. Yes. Can you hear me?
Hello? Yeah, I can hear you. How are you?
Okay, good. I'm good. How have you been?
I'm doing all right. I you know, got up at 2 a.m. today waiting for the rooster to crow. But you know, you're up 24 hours a day, so that probably seems like
not exactly, but sometimes I come close to it.
So, you know, I'm interested with the pound. Is it still? This has got to be. It's got to dig its heels in here pretty soon, don't you think, Steve? If we're going to get another run to the upside.
Yes, definitely.
Okay,
as we mentioned yesterday, yeah, you know, it shouldn't fail below like the high 132s. You know, if it wants to maintain.
Yeah, so we're getting. You know, so the fact that it's drifting down, it becomes good or bad from here. If you're a pound bull, that's usually the best time to buy it, when it's going to be good or bad close to a critical area. So why don't you take the screen and edify our community with your great analysis like you do every day, and okay, me, sure. You know, so yeah, appreciate it.
So there we go. Let's begin by having a look.
Oh, ADP is 1 minute, so we'll be trading, you know.
Yeah, by the way,
like a preview. Yeah, I think ADP is more reliable than NFP now. A lot of people talk about that, Steve.
ADP is usually, correlated. It's obviously highly correlated indicator. It's usually NFPs follow it closely. But by the way, let's have a look at the number. And I wanted to tell you, you seem to be lagging somewhat, Dale. I just asked Stelios to confirm that it's not my issue. But
I am.
Yeah.
You know, and your volume sounds like you have a frog in your throat.
Probably it comes through like that to you because there's something wrong with your internet at the moment. But let's have a look. Okay. Exactly as expected, 190K, and then it was expected to be 190K, so it was exactly as expected. So we shouldn't see much of a move due to that. It's exactly what the market was pricing in. So so far a non-event.
Okay.
Okay.
I have some computer issues.
Yeah, check that your computer is not downloading something at the moment, or you know, because something seems to be affecting your connection at the moment. Okay.
Maybe you could give me a tune-up this week.
Yeah, we can have a look at it. Okay, first of all, you mentioned the Nikkei, and I concur with you. We said yesterday that we're monitoring, you know, this formation for a possible break lower and then another leg to the downside. The Nikkei has already produced this kind of a move. I think that interesting targets to the downside are the 50% fib, or even a little bit lower, close to 21K, where if we zoom out, we'll see that we have the 2015 high, and we also have these triangles resistance that confluences somewhere there and can act as support. So I'm guessing anywhere between 21,300 and 21,000. It's a good area that we might find support, but I do think that we are going to push lower once again for at least an ABC. So I do think that the Nikkei points lower, and more or less, you know, the same applies with USD yen. If you remember, that's what we had drawn here in the USD yen. I do believe that the USD yen has more weakness ahead. We came all the way to 113. We tested this area. We got rejected from that area. We seem to be moving lower again. Somebody can even view this as a potential head and shoulders formation that might develop. So I really believe that the risks are to the downside, with the high we got at the end of last week being, you know, what somebody should risk in case they want to be on the short side. So it's a well-defined risk-reward ratio, reward-risk ratio. It's roughly 100 pips of a risk, and you know, the downside is possibly quite a lot more. I mean, the first target is likely the previous low near 111, which is a little bit more than 100 pips. So even for a move down to 111, you know, the risk, the reward-to-risk ratio is still there. I think it's a nice potential trade. Okay, and the Nikkei might be leading it lower once again. So that with having to do with the Nikkei and the USD yen. And now you also mentioned the IWM, and the IWM, you know, broke out from this megaphone formation, just barely surpassed the 161.8 that we were, you know, looking for resistance, and now it's making itself all the way back to that support, which is close to 150. Obviously, you know, a daily close below it is a bad omen, because that might then be a complete move higher, and we might get a deeper correction quite lower, perhaps even down to 142. But we do need to break down from that area. Now, having to do with the SPX, we also said it yesterday, you know, the rejection from the 261.8 extension and what appears to be like an ascending wedge was nice so far, but you know, there's no technical damage done as long as we remain, let's call it roughly above 2,605. So just a
theory, Steve, that the S&P and Dow are acting better compared to the Russell. The Russell does better when the dollar's strong, and it might be forecasting another wave down in the dollar, which would benefit multinationals rather than domestic stocks here in the U.S.
Yeah, you know something, that's quite likely, because if we have a look at the DXY, you know, it's now breaking above this little descending channel that we had. But regardless, first of all, it hasn't even broken any level to the upside, even soft resistance levels. Like, for example, we have the 9360 area. We haven't broken above it. And, you know, if you look at the chart, another push lower looks quite likely. I mean, this could have easily been the end of a corrective move. And we've said plenty of times that the index has spent all of 2017 being on the back foot. It's definitely a bearish year for the dollar. And, you know, the trend is your friend. So being bearish, statistically speaking, is obviously the right side of the market to be. Now, of course, nothing moves in a straight line, and as our friend said yesterday, besides cryptocurrencies for now. But, you know, being short the dollar is like, you know, something that makes sense. It's, with the exception of this period, like from the middle of September to, let's call it roughly, the middle of November. So besides these 2 months, it has been strongly trending lower, and you know, quite likely that 2-month correction was it. Okay.
Regarding Bitcoin, Steve, I just saw a report on CNBC that some of the astronauts at the International Space Station thought they saw a meteor. They thought it might have been a meteor space debris, but about 50 Bitcoins just flew past the space station.
Yeah, it was the chart of Bitcoin penetrating, eh?
Yeah, it might consolidate 200 miles above the Earth. So, wow.
Yeah, there we are at the moment. I mean, yeah. You know, honestly speaking, in all honesty, if you remember, I wrote it earlier in the you know, in our common Skype chat. You know, Bitcoin, it has reached the point that there is absolutely no form of analysis you can do to it. Honestly speaking, I mean, you know, we are offering services of analysis to people. Obviously, there's no question about it, and you know, whoever is a subscriber to ForexAnalytix knows that we're doing a quite good job. I mean, you know, our patterns in play show that as well. But honestly speaking, just look at this. It's every period of time of steep appreciation is followed by a steeper appreciation, which is followed by a steeper appreciation. There is absolutely, I mean, the only kind of paradigm you can find in this case is like the tulip mania in the 17th century, and I think that even the 1999 tech bubble is, you know, if you put it in context, looks, you know, benign in comparison. So honestly, what kind of analysis can you do to this thing? There's nothing you can do.
Parabola.
Yeah, at the moment, let me find.
You need a compass.
Where was
Maybe
it?
Starts going backwards.
There is a tool that measures angles. I'm trying to remember in which tab it is. I rarely use it, of course, but in some few occasions. Oh yeah, there it is. Okay, so currently the recent angle of appreciation is 75 degrees. I mean, come on, honestly. Really, I mean, yeah, what we can say, you know, whatever target you put here, it just penetrates through it that like it's non-existing. We currently have like a daily RSI being at 89. I mean, you know, at some point this thing is going to implode. Now, at what point? I think it's anybody's guess, honestly.
All right, well, let's come back to Earth and let the astronauts deal with this. My stepson asked me about it a month ago, and he said, well, what do you think of Bitcoin? I'm hearing it's been going through the roof and it's going to continue. And I said, I don't know anything about it. And that was about $5,000 ago.
Yeah, you know something, my best man, I mean, he's a banker in London, so we're not talking about a random guy. He sent me like an SMS yesterday asking me, you know, do you think that I should buy some a few bitcoins now that they're offered. He meant now that they're offered because he wouldn't be buying it from obscure exchanges or whatever. And what I answered to him, directly, I'm just going to read you my message. It was in Greek, but I'm going to translate it. I told him that, listen, in my opinion, this is like an amazing bubble. So I cannot exclude the possibility that it's going to climb quite a lot more. But I can tell you with certainty that at some point in the near future, in my opinion, it's going to lose more than 50, 60, or even 70% of its value. Now, from which point exactly, nobody can tell for sure. But I'm pretty sure you don't want to get involved with something like that. So, that's the honest opinion I gave, to a very personal friend of mine. I mean, we're friends since 6 years old, you know what I mean? So
Okay.
that's my sincere opinion about it. So he said, like, yeah, you're right, just I'll let it be. Let's have a look, because we have a few questions, and sometimes questions help me focus, because these are two currency pairs I wanted to talk about today. It's the USD SEK and the USD NOK. We had a lot of discussions yesterday in the chat room. Quite a few of our chat room friends are actually involved with the Scandis, as it seems. And to be honest, I can't blame them. I trade them quite a lot myself, because technically they are very well behaved very often. So we have a question here about USD SEK. And I have to tell you about USD SEK. I was contemplating of selling it yesterday. I haven't done it yet because I was monitoring this trend line. As you see, this is not a parallel. This is not an ascending channel, because the two lines are not parallel, but they do depict quite nicely, where the support and where the resistance in this market is. So, I'm viewing this move higher as a corrective move, and you can see why. Because in my mind, there is not much to doubt that the move we saw from the end of 2016 until a couple of months ago was impulsive in nature. I mean, the move lower. So this move higher that broke the descending channel, I'm viewing it as a corrective one. And for the time being, the 200 daily moving average is capping. We also got rejected from the 61.8. Yesterday, we saw a very nice outside black candle. Today, we're not seeing follow through, but I really want to see a break below this ascending trend line to get involved. And I am looking to get involved, actually. I think I'm going to be selling this sooner or later for a move at least, towards 810. Now, having to do with the USD NOK, the same thing applies here. I'm getting very close to the point that I'm going to be selling it. I'm also monitoring this 200 EMA. I had sold it. I took very nice profits on half of my position, but the other half of my position got stopped out at break even. And I was looking potentially for, since we actually broke above the previous high, for another move higher towards the 840 to sell it there again. But it seems that we might not even make it there. So I'm probably going to be selling it, quite soon, looking for a continuation of the move lower. So I'm interested, and I'm going to be involved in selling both of these currency pairs. Now, another pair we were discussing yesterday in the chat room, I know that Stelios is very actively involved with it, and it now looks very good, is the Euro NOK. Okay, so let me first zoom out to show the big picture here. So the Euro NOK broke above the highs that we had there. It was following, and it's still following, a steep ascending channel, and it has now come back to retest this horizontal support resistance area after producing some very nice bearish candles. Especially yesterday's candle was like a huge outside black candle, but I really want to see it break this area, because as you see, highs and lows have been formed there, for me to gain confidence that a deeper pullback is underway, and I might get involved with that as well. So I think these currency pairs are are close to giving us some good trading opportunities, and that's why I'm closely monitoring them. Let me see what other questions we have, and I'm sure I'm gonna remember more things I want to show. Ronit says, as long as it stays above 92, quarterly chart is fine. I'm guessing that he's speaking about the DXY. Yes, okay. Yeah, I can accept that, mate. But just seeing how it has behaved during the whole 2017, I cannot be overly bearish at the moment. But gun to my head, if I had to be short or long at the current juncture, I would be short. The DXY, I've said it in the past as well, has had mixed behavior during the past few months. I mean, it has had currency pairs with which it still behaves well, and currency pairs with which it has been very weak. So to be honest, I'm not outright bearish or bullish the dollar. There are pairs that I want to be a buyer of dollars, and pairs that I want to be a seller of dollars. So far, I'm not seeing another, all over the board weakness or all over the board strength period for the dollar. Amazon has been moving in a straight line. More or less, that's true. But if we overlap the two charts, you'll see that it's nothing in comparison. Speaking of Amazon, by the way, it has been showing weakness during the last period. By the way, this was one of the most emphatic invalidations of a head and shoulders formation. We were monitoring that at the day that we would have, earnings and an earnings report, and we were monitoring at the potential if we had like a bad print. The potential head and shoulders formation, and we said, if it gaps below there, then it should be moving lower, and that's what happened. So Amazon, yeah, obviously, if you look at the chart, it's extremely strong. There is no question about it, but it's nothing in comparison. Really nothing in comparison. And just imagine, Amazon is a company that actually produces revenues, profits, etc., and it's currently valued like at $1,120 its stock, $1,140 its stock, and it has intrinsic value. You're buying something specific. You're buying a company that is doing, great, that it has an amazing market share, etc., etc. Now, if you ask me what exactly you're buying with one Bitcoin, I can't answer that question. I mean, what is the intrinsic value of one Bitcoin? What can prevent it tomorrow from collapsing back to zero? I can tell you what would prevent Amazon to collapse back to zero tomorrow, but I can't answer the same question about Bitcoin. I'm not saying it's going to do that. I'm saying that, if you ask me to disprove the theory that for some reason tomorrow Bitcoin is going to be back at 100 from 13,000, I can't. Let me see more questions. Crude, yeah, let's have a look at it. Actually, crude is quite interesting. There we go. That is the soft support we were monitoring yesterday. There was a soft support at the 5720 area. Obviously, the potential for, that's what we said yesterday, obviously the potential of like a little bit of a deeper pullback, even towards 55 is there. But I remain bullish. So even if we go all the way down to 55, I'm still a believer that oil is going to move higher. As simple as that. So are we going to find support somewhere here? Are we going to find it a little bit lower? Are we going to find it at 55 once again? Any of that might happen, but in my mind, there is no question that the trend, remains a bullish one, and until or unless proven otherwise,
I'm going to prove you otherwise.
Tell me.
I'm just kidding.
I'm kidding as well. Yeah, so unless we break like emphatically below 55, I wouldn't be looking to be selling crude. I don't know what you think, Blake.
I was looking at crude. I think it was yesterday. I was looking at it at the. Let me pull it up here. I'm going to look at it myself. I haven't looked at it yet this morning. The one thing, the one thing that worries me a little bit about crude is just that we've broken up trend line and we stopped making higher highs on like an intraday basis. So, and now we're making, well, we haven't started making lower lows really, but the fact that we're making lower highs and the fact that we broke above, here, I'll take over from here just so you can see it. It's slow today, isn't it? It's slow. Okay, so here's crude. Now I think the thing that I was concerned about the most about crude oil right now is that we see these lower highs. You can see them at the top here. We haven't started making lower lows yet, but we broke through this trend line. So are we starting to top? And I agree with you. I think we have to get through this 55 level, which you can see as a kind of a very thick support zone for me, because this is the breakout point. So have we turned bearish? No, but I think the bullish momentum is completely
on,
yes.
We definitely are in the precipice of some kind of a correction, but as far as I'm concerned, I need a lot more evidence to view it as something more than a correction.
Yeah, right. And I agree. And let's not forget that crude made a really bullish breakout of this triangle, back in the beginning of October. So I mean, it's been a pretty big move higher. I guess we should probably talk about this a little bit. Did you see copper yesterday? Copper got crushed, right?
Copper got an interesting move.
Yeah, copper got absolutely hammered yesterday, and you got crude coming off today. You've got unit labor costs. Hold on, sorry. Unit labor costs that just came out this morning, they were a big miss. You got copper that's coming off, you got gold that looks weak, you got silver that looks weak, you've got crude that looks a little dicey here. What if inflation expectations start to fall again? And just when the market thinks that inflation is really starting to rise. I was talking to my friend that one of the most experienced, wealthiest, most successful traders in the currency market of one of the top guys, and I was talking to him yesterday, and he goes, and it's kind of the same thing that I was feeling, and I've been feeling. We were talking about bonds don't feel right. The bond market, in the event that we have higher inflation, all right, bonds should be, selling off. And let's go over to the bond market. These are yields. So let's talk about bonds. Bonds should be selling off, right? Yields should be rallying. The market's expecting higher rates. We got inflation coming. Why is the bond market showing signs of reversal? And that, that generally speaking very much concerns me. And I don't know if, we've been fooled about higher inflation. How many times, Steve, over the last 7 years, 8 years?
A billion.
Right? A billion, right? Like, I mean, every corner we turn, inflation is going to rise, commodities are going to rip, blah, blah, blah. I'm sitting here looking at the bond market saying, but the bond market's not telling me that. You know, if the bond market was, you know, we were selling off aggressively, I would be, you know, in that camp. But right now, I don't know. I'm not necessarily in that camp right now. So and when you look at crude, and you know, could ultimately crude be a false breakout? I mean, I don't know, but I'll tell you that crude doesn't look. It's not looking bullish today, and you know, and as Steve pointed out, below 55 bucks, and I would be. I don't even trade crude, and I wish that we had. In the currency market, I wish we had more currencies to trade that are really following the price of crude, because right now we aren't. We don't. The correlations have broken, at least for the time being. You know, we're not seeing. We've seen this rally in crude oil, but the Norwegian krona has sold off. This is a good example. I mean, here's a. You can just compare this to the U.S. dollar and Norwegian krona. Okay, you can see crude oil has rallied, but the U.S. dollar and Norwegian krona has gone up. Same with the U.S. dollar Canadian. Here's the U.S. dollar Canadian. You know, and what should be happening, just so you guys know, is if crude's going higher, these two should be going lower, based on a correlation standpoint. They would move. Actually opposite to what you've seen here over the last, you know, last few months. So I'm wondering if is it the correlation that's broken, or are we just seeing a divergence, or you know, divergence or correlation, and then you know, and eventually they'll catch back up. I don't know. I don't know. I don't have the answer to that, but it's something that, you know, I'm looking at crude and I'm like, okay, well, if crude broke 55 bucks. I have to jump on the bandwagon that crude is probably posted some sort of false breakout, and it's gonna, you know, take a real big extended nosedive. But I guess the question is, you know, how do I trade that in relationship to the currency market? Because right now I don't have that answer. I don't know what correlation will take hold. And that goes back to your comment, Steve, about the U.S. dollar Norwegian krona. I'm short the U.S. dollar Norwegian krona personally. I got short it last night. Do you know why I got it short the U.S. dollar Norwegian krona last night? Actually, I got short on the rally after the current account data out of.
First of all, we had a very bearish candle yesterday. Second of all, it was another retest of the 61.8. I mean, I can't blame you. I'm about to go short as well. Once again.
So that's exactly. So if you guys missed it, 618 retracement, bearish engulfing candle yesterday. So my thought was, okay, and this is part of the conversation that I had with that, you know, gentleman I was just talking about regarding bonds. I told him last night, I'm like, listen, you know, if we get a rally in the U.S. dollar Norwegian krona to 829, I'm a seller, and I got filled. So I you know, and you can see last night I got filled like right around here. Could have got a better price, but I was sleeping. I got filled, and I'm short the U.S. dollar Norwegian krona. This is a bearish engulfing candle. Now that takes me over to, well, how do you deal with the dollar right now? Because the dollar, you know, the dollar has, you know, made some headway. You know, we broke that beautiful downtrend line that was confetti ridden with sparklers, and I forget what we did that yesterday. But look how respectful the dollar index has been since this breakout. Okay, I'm gonna just let me grab a different pen color because I don't like that pen color. Blue will work. Okay, so look at we rally past breakout, we come back, retest, right? We bounce again, but notice where we failed. We failed at the 38% retracement. So because we failed at the 38% retracement, I'm a little, you know, this feeds into my idea that, hey, maybe the U.S. dollar Norwegian krona is a good short, because if the U.S. dollar just, you know, is doing a more of a long term, which you can see is very reminiscent of this, okay? Bear flags, just so you guys know, or, you know, consolidation patterns before resumptions, you know, 38% retracements tend to cap them. And if you get only a 38% retracement, okay, so let me think a little bit more longer term for you and draw it like this. If you think a 38 or just a retracement rather before a continuation, if we only get a 38% retracement, that's fuel for a potential that's potential for a continuation and another bigger flag pattern, which I just tweeted out, and I know I haven't been tweeting the last couple of days too much, just because it's markets really between us. The market's kind of stunk the last few days. I mean, there's not a whole lot going on. That can change though, obviously. But you can see I'm looking at more of a bull flag and a bull flag. Well, how about if we have a bull flag pattern here in the euro dollar, and you know we start making our way back towards 119. We break above 119.50, and this thing's gone. Then the euro dollar is on off to the races towards the 120. Level and beyond. I mean, that's what we would be looking at. And again, these are just kind of like ideas of things that I've been I'm following right now, and I think the dollar is at risk. The dollar is at risk here, and as Steve pointed out today earlier, today may be the end, or we might be close to where the dollar has the dollar has peaked, for now, and that may very easily be the case. But now I'm just kind of focused right here, making sure that the dollar holds this. Basically, you can say roughly about here. As long as the dollar holds below this, resistance zone, I think the risk is still for a continuation lower. So anyway, that's all I have to say about the dollar. Dale, are you still around?
Yeah, Blake.
Hey, I want to let you know, your internet was a little shoddy, and I heard it too, because Steve was coming through just fine, and you're a little choppy there earlier this morning, and I guess the one reason why I wanted to bring that up is whenever that happens to me, sometimes I need to just reset my router, so okay. Just a little food for thought. That means, unplug it, leave it completely unplugged for, a minute, and then plug it back in, that type of thing.
I'll give that a shot. How's it sound right now?
It sounds fine right now, but it probably comes and goes a little bit. Probably will come and go a little bit. I just, I know when you have interviews, that type of thing. Hey, let me see if I can take a couple of questions that have come in really quick. Ronit says U.S. dollar Canadian all oil currency. No, the U.S. dollar Canadian has broken the relationship, Ronit, to crude. I just showed you the last 2 months. If you've been watching crude and trying to trade the U.S. dollar Canadian as a quote unquote correlation, you're going to get your ass handed to you. Period. End of story. Bill said, persistent low inflation environment seems like it's here to stay, and the danger is that the central banks and excessive QE have overplayed it, and that in itself is a big risk. They are sitting on a powder keg with gas all over the place in a dark room and about to light a match. Okay, what is a good, and I'm going to ask you guys, what is a good example of a situation in history where we've seen a persistent rally in equities, but persistent low inflationary environment or deflationary environment? What do you guys? I'm looking towards the viewers here. Dale. No, stop. Steve. What the? Dude, seriously. No, I'm trying to. I try to make the. You probably remember me saying this on the Morning Edge. Okay. I love to do these webinars. I love to do these webinars so you don't sit back in your desk or on your couch or wherever you're listening to this with your feet up on the table saying, did Steve just say short the U.S. dollar Norwegian krona? Okay, great. I'm going to do that. I want you guys to think, because if you listen to this webinar, what we do here, and you can learn something new every day, a little bit of something, and you're putting your mind to work. At some point, whether it's 30 years from now or it's 2 months from now, these webinars will stop. You know, I hope it's more like 30 years from now, but you never know. You never know. Maybe I don't exist anymore, or maybe Dale doesn't, or Steve, or heaven forbid. But I'm just saying, if you walk away from here and you learn something every day, that's what makes this webinar valuable. It's not just doing analysis and saying, oh, the euro set up for a good short, let's go short, or I'm long the pound, this looks great. Hey, did you guys get long the pound? It's not about that. It's all about you learning something every day. So if I can engage the listener, that's where it becomes valuable. So I love to ask you guys questions requiring an answer from you, and you can use the Q&A panel if you want. I hope you can. A lot of you just are too shy and you don't want to answer, but at least you're thinking. And at least I can get your brain moving. All right, so Steve, you spoiled it. I'm just kidding, but really it's Japan. No, but I'm trying to make a point here too, is when I ask a question and I say, hey, listen, I want the viewers to answer this, it's because I want you guys to be like engaged. I don't want you just to be going, drinking your coffee or your tea or your vodka and thinking, oh, what did Grega just say? Did Grega just say he should be going long the dollar yen? Great, going long the dollar yen. I don't want that. I want you guys thinking about these things. So, yes, if you go back, and now I know Japan there's a lot of other issues, and I'm sure Steve would mention all of them. One of them really has to do with the demographics of Japan, and
actually all of them have to do with their demographics. I mean, everything else is a product of the problem they have with demographics.
Yeah, you're right. But also they went through a very long period, and still arguably is going through a long period of deflationary pressures. But if you look at the Nikkei, it's scary, because I look at the Nikkei and I look at this, and I look at the late 80s, and this is actually not even good. Let's see, Nikkei. Let me give you the index on a monthly basis. Oh, shoot, I'm trying to get you some more data here. So Nikkei futures, it's not going to work. I guess the Nikkei, this is going to be the best for now, and I could pull up a chart going into the 70s, but this is the Nikkei stock market rallying until the market until everyone figured out that Japan was in a deflationary type of environment for the next until present time. So we're sitting here with equities at all-time highs. Inflation, I know everybody thinks inflation is coming. I know everybody's thinking it, and I'm thinking it too, but I'm watching commodities here, and I'm not a believer. I'm watching bonds here. I'm not a believer either yet. And I'm not saying that I won't be. I'm not saying that I won't be proved wrong, which, hopefully I am, because I don't want to be in a deflationary environment. I'm going to tell you guys, for my sake, for my kids' sake, for the next 20 or 30 years, the last thing I want to be is in a deflationary environment. I just don't. So anyway, this is a scary type of thing, especially when you have Steve, does this look reminiscent of anything that you know right now?
Won't we have the viewers answer that?
Yeah, I mean that's you look at the Dow let's put the SPX. You look at the S&P. This is scary. These types of moves are very scary, and the one thing that could happen, and I'm hoping what is going to happen in this equity market rally that you see here, is we're going to see some sort of pullback, and then there's nothing. It's a pullback consolidation, and you know what I hope is going to happen is you see some, you know, pullback, you know, consolidation, and then, you know, continuation higher. That would be the best case scenario for my retirement, your retirement, and, you know, everybody else's retirement. You know, that would be, you know, what I think is our best case or our base case scenario. But the problem is if you get in a reversal type of situation, we start getting here, and then the macro backdrop changes, and then we have a little bit of problems. So
definitely the flattening of the yield curve, which is just non-stop ongoing, is definitely not a good thing. We've mentioned it plenty of times in the past, but you know, for people that follow economics, they know that, you know, nothing good comes out of a flat yield curve, and you know, the flattening of the yield curve precedes every single.
Heaven forbid we invert. Right?
Yeah, inverted yield curves is always an indication of a recession. We're not there yet, but let's say that we are already in the yellow zone, let's call it. And I know that the data keeps on coming well, but the bond market has the remarkable ability to always look ahead. And, you know, it has flatlined quite a lot, and it doesn't seem to be reversing. And, you know, that's definitely not a good sign for the months to come.
And
right.
Also, guys.
Oh, hey, Stelios.
Hey, sorry, just wanted to add, you know, flat yield curve is terrible for banks. So you know how banks can affect the economy. So, you know,
absolutely, yes.
Flat yield curve is very bad for banks, bad for everything.
Yes, because banks actually make their money, you know, doing exactly that.
Yeah, so let's look at the banking index since you mentioned that, Stelios. Here's the banking index. This is the end of day, but you can get a good idea of where we're at. So we're up around the 78% retracement. Look at this huge divergence. This is a weekly chart of the banking index. We've had a hell of a recovery right to basically the breakdown point, which is pretty basic stuff. I mean, you know, when you talk about like basic technical analysis, coming right back to previous support, which is acting as current resistance, that's a big sell zone right there, as far as I'm concerned, as far as the banking index. Let's say the banking index really starts to take a turn lower. I mean, you know, would that be your, you know, maybe your first guess that things are kind of sour a little bit, right? Right?
Yep.
Right. Okay. Anyway, Ronit said he says Nikkei 1996 highs is equal to recent highs. Dow 24,400 is like 1989 30K Nikkei, and guess what? December 1989. It's December 2017. All major bears start in December. I don't know if all major bear markets start in December, but I think that we could see if we turn lower in the month of December and we don't get the Santa Claus rally, which, you know, by the way, tick tock, you know, time's a ticking right now. So if we get some sort of and you know why we're probably going to get a Santa Claus rally, to be honest. Do you know why, Stelios, Steve?
Because we always get them.
Dennis Gartman went bearish. He went bearish again. Damn it!
Oh my God!
We're all screwed. We're going to new highs in the market. Oh, I left it at that. Oh, I gotta go. What's that? No, I just so everybody was just everybody in our chat room, and here you can just say hi, guys, in the chat room. You're on the jumbotron.
I'm short of gold. I'm short of. I'm long of. I get the of.
No, everybody in here. There's 92 people in here right now that are chatting around. But everybody's like, oh, you know, Gartman's gone short. You know, we're going to all-time highs, and Gartman's gone short, and the Nasdaq rallied, you know, 20 points.
But he's the king. He's the commodities king.
Yeah, I don't know.
The emperor has no clothes.
You know, I don't I don't like to troll a lot of people, and I usually, but I still can't get over I still can't get over the fact that he is. Oh wait, what was that? Wait, hold on. Who just made a pirate of me? And who's that guy?
Yeah.
Okay, that's nice. Anyway, thanks, Ziggy. That's fantastic. No, I was just saying that. But the guy, he gets so much airtime, and he's so wrong, and I can't wrap my mind around like how we had a trader on our floor when I first started trading. His name was Wrong Way, and I can't tell you his name because he might actually be listening right now. His name was Wrong Way, and we would call him Wrong Way behind his back, you know, type of thing. He'd stand up and he'd say, "I'm buying 3,000 shares of Microsoft." We would all like duck underneath our desks and start shorting Microsoft. You know, it's just like one of those things. Yeah, but yeah, he's that guy. He's that guy. He's a great fade if you know what you're doing. Anyway,
how did he survive in the industry?
He didn't actually. He ended up being an operations guy. Yeah, he ended up being running the firm rather than trading. So if that tells you anything.
Yeah, it does.
It does. Okay, good. So with that being said, Dale, I'm sure you have an interview today, so I'm probably looking like an ass right now. So I'm gonna stop.
Well, you know what, Blake? I think you made great points because what we do here is not just for subscription dollars. I don't know how you feel about it, but it's also a legacy to have taught people how to fish. And I know from people that have been in my trading rooms that a lot of traders give credit to your teachings for helping them become a full-time trader and be able to spend time with their kids if they were ill and everything. And that's why I say our mission every day is to build up and edify traders every day. But you're right, they have to not be lazy. If you're going to be lazy, you just you go to a signal service,
Yeah.
And but to learn to be self-directed takes work. And as far as 30 years from now, I wouldn't take bets on it for me, but it's important that people put energy into becoming a trader, because you're right. I mean, everything is temporal, and one day if they don't put energy into it, they're going to miss this. Like we always say the past, those were the good old days. Well, you know what? These are the good old days right now.
They are.
And and they should use the videos too, Blake. I mean, they're great teaching tools if they're working. That's why we have a YouTube channel that they could. What's great about the videos is when there's a nugget or an explanation of a method, they could pause it, they could replay it and learn. So I'm with you on that. I love having an interactive community.
Absolutely.
So
absolutely.
Great answering on that again.
Thank you. And you guys have a great day and have a great interview.
Okay, Mandy's going to be with us. It's going to be great. She's talking money mindset. So I see you, Mandy, and I'm about to make you the presenter. So this is a return interview from Mandy for Rafsanjani at MPX_trader. And
yes, that's right.
Hi, Mandy.
Hello, can you hear me?
I can hear you fine. How about me? Am I coming through loud and clear?
Yes, fabulous.
Okay, great. So you can screen share. You said you had a PowerPoint that you wanted to go through. So you just hit the screen share option and that'll show. There we go. Okay, so Mandy's gone through a lot of trouble and effort because she too cares about people. And that's why I was excited about bringing her back. And she really works with people so they can understand themselves, not just the market, but themselves. So welcome back, Mandy, and looking forward to what you have prepared. Thank you for the effort.
My absolute pleasure. It's always fun. So it's 1:05 in the morning here, and the market I think opens in 25 minutes. So let's cracking, huh?
Yeah.
Thanks everyone for being on the call, and I hope I can help add some pieces of the puzzle for you tonight on why you might be not as successful as you wish you were, or what makes the difference between successful traders and unsuccessful traders. And I say piece of the puzzle because, you know, it's not just one thing. It's not just being disciplined and patient, or it's so much more than that. It's many, many little pieces of the puzzle that need to work together in order for us to perform at the levels that we want to perform. And one part is really the money mindset. And I love this saying, if your unconscious financial blueprint is not set for profits, nothing you learn, nothing you know, nothing you do will change your trading results. So, you know, the work that you've done with Blake before, it's just one piece of the puzzle again. It's like your body. In order to perform best, you need your 5 senses. You perform best with having your arms and your legs fully functioning. So if you look at trading strategy, maybe being your legs, and your your trading mindset being your arms, one does not work perfectly without the other.
Yeah, they call that a peak performance state. I know athletes do and traders do, being in your peak performance state. So, you know, physically, there's a lot of training involved in that. So this is probably much more, although I will say, Mandy, that when I'm working out, I'm much more relaxed as a trader than if I get into being sedentary and don't have a release for all the stress that occurs as a trader. So I'm interested in how you get people there.
Oh, wow. That takes a few days in training. I will skip the disclaimer. I believe that you have that covered. So if we look at the money mindset, right, there is, you all talking about sports. I'm sure you all have heard of this fabulous book, The Inner Game of Tennis, or The Inner Game of Golf by Galway. And it's a fabulous book that every trader really should read. And if you look at money mindset, the way you deal with your money, the way you manage your income, your expenses, is pretty much a reflection of how you will behave in the markets as well. And I have done a lot of research on that. I've worked with, you know, so many traders, and every trader has to fill in a questionnaire and has to really do deep work in how they handle money in their areas outside of trading, and then we look how that is actually reflected in their trading as well. So the inner game of money is, you know, your beliefs around money, your values around money, who you believe you are in the context of money, how you feel about money, and so on. So that's the inner game. And interestingly enough, the biggest reason why couples fight over money is not the money itself. It's because we have different values and beliefs and standards. And once we understand that, we can either adjust our mindset, our money mindset, so they're in tune with each other, with our partners, or we can have compassion, understanding that they think differently, and don't fight about it. Because if you look at it, I mean, it's still, finances are still one of the biggest reasons why couples separate. And also in trading, I get that so often, you won't believe it, Dale, where traders come to me not because of their trading problems, but because their partners say, I had enough, I want you to stop trading because I don't know who you are anymore, I can't deal with that, where's my husband, or, you know, where's my wife? Where people really change their behavioral patterns in their their personalities, and that has such an impact on their relationships. And you know, if our life outside of trading sucks, it is really hard to perform in trading. And then there is the outer money game, right, which is the business knowledge, the money management, risk management, trading strategies. This is the easy stuff. because that's tangible for people. Like we can see it black and white. If our money management doesn't work, or risk management doesn't work, we have statistics that we can look at. Whereas when it comes to the inner game, it's a little bit harder, right? And even before the financial downturn, so many people went out of business because they had money problems. Now, there are 4 blockages that when I work with someone on their trading challenges that I look at, and then I also look at that at the blockages in the context of the individual categories. So maybe money mindset, maybe performance mindset, maybe specific trading mindset. They all have those blockages, right? Which is spiritual, mental, and emotional blockages, and they then manifest in the physical world. So we have someone who has challenges with their finances. Let's say they just don't have enough money, they're struggling to pay the rent. Then I look at, so that's the physical manifestation. And then I would look at, is it the spiritual, mental, or emotional level, or even all 3, where those blockages are sitting? And then when we know that, then we can drill down into real good work, tangible work, and release those blockages and help the trader to perform. Again, it's hard for traders to see themselves in the context of trading, but it is so much easier to see it in other contexts but trading. So can
you give us like one example of each blockage? Say, for example, the emotional, what would be an emotional blockage?
So an emotional blockage is something where we have a experience, a relationship with money that is pain-based, where let's say someone came from a relatively wealthy or well-off family, and then the family lost everything. And so, there was a lot of pain around money, or where they saw someone exerting control and power over other people with the use of money. I always say money and love, they have the same energy. We can do a lot of good with money and love, and we can also do a lot of hurt and pain inflict on other people with money and love, right?
How about mental?
Mental would be where simply we have a lack of financial literacy, numeracy. So we're just not trained in making prudent financial decisions. And one perfect example is the work that Daniel Kahneman did in his documented in his book, Thinking Fast and Slow, where he did so many experiments on how people naturally make financial decisions, and he found out that we just are not wired to naturally make good financial decisions. So we actually have to learn how to do that. And then there's also someone else that I'm going to quote tonight. It's the brothers Klontz and Klontz, so K-L-O-N-T-Z. They also did a lot of work around how the experiences people have around money and how they make financial decisions. So that would be also the mental, just simply a lack of financial literacy, numeracy. And it's easy, it's all over the internet. We can go out and learn and study it. And spiritual is something where, so I'm not wanting to be political or religious, right? I have no, I'm very neutral about it. But the reality is that we all have heard the sayings that it's harder for a man to go to heaven than for a camel to go through the needle.
Yeah, the eye of the needle, right.
The eye of the needle, that's the one. That is, for example, where I also do a lot of work with traders who are have strong religious beliefs, and they feel they have a conflict. So parts of them want to succeed in trading because that's what they love doing, and they see so much potential also to provide for their families and to do good in the world. And yet they feel that it's in conflict with their religious beliefs. So where we need to learn to put those into line with each other, where they work with each other rather than working against each other.
Okay, interesting. Can you give an example of a religious belief that is anti-money? I know that, certain religions, priests will take a vow of poverty, and so, but you know, most religions, you know, it's you know, go and prosper and go and reproduce, and you know, it's about abundance, not about scarcity as much. So I'm wondering what kind of spiritual blocks you've run into with people that feel it's not right for them to make money in the market.
I think it's more the, it's a shame because I had a slide that I took out because I know we don't have much time. Okay. One example is where, what is that saying again? It's another saying from the Bible. So it's those underlying subliminal messages where, you know, rich people that don't go to heaven and poor people go to heaven. And also, if you look at, the
meek shall inherit the earth, something like that.
Yeah, something like that. So it's just little sentences like this, and also when you watch movies, right? So we have soap opera here, like called Home and Away, which is famous all across the world. It's always the rich people who is a nasty person. I have yet to see a movie where, you know, like the soap operas, soap shows, soapies, where a rich person is a nice, kind, giving person. And we know there is nasty, wealthy people and nasty, or I would say rich people and nasty poor people. It's like it's not related with money. It's the person. Money just brings out more of what we already are. But we grow up with those unconscious experiences.
Mm-hmm.
So,
okay. Thank you for giving us examples on that. And so now we're going to the process of manifestation.
Yes, so if manifestation is a little bit too spiritual for you, we can just say that's the strategy of how we get to...
I'd like to hear about it. I was once accused of being a manifester.
Ah, I love it. Who doesn't want to be a manifester? It's the best thing ever. So if we look at our results in life, right? Maybe in trading, relationships, and health, everywhere in life, we wonder, where do those results come from and how can we replicate them? Now, our results are, of course, they're a result of the actions that we take. And what determines what actions we take? It's the thoughts and feelings. So if the thoughts come first and they cause feelings, or the feelings cause the thoughts, I am not sure about that as yet, and it doesn't matter. What is most important is, where do our thoughts and feelings come from? And they come from our programming. And our programming is our values, our beliefs, our attitude, our mindset that was formed as we were growing up.
Yeah, or it could be called your paradigm.
Exactly, a paradigm. I love the word paradigm. And I love the word paradigm shift as well, because if we look at our results and we are not happy with our results, you know, so many traders that come to me, they say, I want to learn how to be patient and disciplined. But this is in the thoughts and feelings level. And that causes the actions. And it's not what transforms your trading. What transforms your trading is your paradigm.
How about this, Mandy, that if you don't learn about yourself, that all you'll be left with is a pair of dimes.
Wow, I've never heard this one. I love it.
Instead of paradigm, a pair of dimes. So, okay. So we know that, and conditioning. Okay. And are most of us conditioned by the time we're like 7, 8 years old before our ego develops and we begin to challenge what we've absorbed without any kind of filters in our environment?
Yep, so that's pretty much where it starts, where we are being influenced, where we unconsciously model our parents or people who are our caretakers, right? The magical big people, as I like to call them. But it actually goes beyond that. So even during teenage years, we still develop our conditioning. And sorry, I can hear feedback. Some.
Can you hear me?
I can hear you, but I can also hear myself.
Oh, I see. Okay. You're echoing to yourself. Okay.
Yeah.
Sorry.
So that's okay. And even when we have important experiences when we are older, so, you know, let's say we are in our 40s, I just make the number up now, and we go through a significant divorce, that also has a big aspect, a big influence on our conditioning as we grow older. So it's not only when we are young, it's also big events like death, like a birth of a child, right? Changes how you deal with money as well, how you deal with trading. So what we want to do is, in order to find out what our paradigm is, we want to go back and say, what was the verbal conditioning that we were exposed to when we were children? Or, you know, as we were growing up. So that's, as you say, up until the ages of 7 to 10. If you, for example, had a father figure who would have resentment against successful, wealthy people, and then you grow up and you want to create wealth as well, you would think that because it is so important to you to create wealth, that this is what you're going to pursue. But unconsciously, what is going to override that desire is the need to belong to the father, to belong to the parent, and to not disappoint the parent, and to do what the parent wants. And this is all happening on the unconscious level. Right. So if you have a father or father figure or parent figure who despises wealthy people and you want to be wealthy, you will always do some sort of self-sabotaging behavior just before you cross the line, because that unconscious need to be close to your parent is stronger than the desire to be wealthy. And because it is on the unconscious level, we keep banging our head against the wall. It's like, what's wrong with us? Until we can dig deep and find out what is actually going on. And then we have the awareness, and then it can be shifted easily. Then you can have a paradigm shift.
So if someone finally realized it was their father's attitude, there's just the fact that you now have that awareness and you bring it out into the light, that makes it lose its power.
Exactly. I hear that over and over again when traders finally realize, oh my God, this is the thing that had its power over me. It just falls off them, literally. So yes, it loses its power. However, that means that they still, up until the age they discover it, they only have learned strategies and behavioral patterns that they know that sabotage their behavior. What we also need to do is we need to learn new strategies, new behaviors that actually continue the path of accumulating wealth and keeping wealth, right?
Yeah,
and
so
not making money
losing
money.
The software.
Exactly, that's the one.
and that's done through what? Repetition? Practice makes perfect?
Yeah, it depends really on the context of the trader as well. So for some it's repetition, for some it's really simple, helpful aspects where they, for example, an unconscious sabotaging behavioral pattern would be refusing to look at your statistics, at your metrics. And many traders don't know how to read their performance statistics. They don't understand what to look out for beyond profit and loss. And they would stop themselves to pursue that. That is an unconscious self-sabotaging behavioral pattern. Once this power of the parent figure falls off, as we mentioned before, suddenly they don't have this resentment against statistics anymore. Suddenly they're happy to keep their statistics. It's amazing, right? So this is how it plays out, for example.
Okay, so let's go to this psychosis of money.
Psychosis. So how these conditionings then play out as we are older, they play out in a money disorder. Now, everything that I present here tonight is actually taken from Klontz, K-L-O-N-T-Z. So I want to acknowledge him. I simply put that in the context of trading, and I use it as well with my traders, and I see how amazing insights we get. So money disorders are persistent, rigid patterns of, fancy that, self-destructive and self-limiting financial behaviors that cause significant stress, anxiety, emotional distress, and impairment in major areas of life. Now, also, guys, the reason why I have so much text on my slides is because I obviously have an accent, and I want to make sure that you all are, you know, on par of what we are talking about, and you're not trying to keep up with my accent. So those money disorders, they're really interesting. The anxieties or emotional distress that we might experience in trading is maybe a money mindset problem and not a trading mindset problem, is maybe a lack of numerical and financial literacy, rather than, you know, there's something wrong with you. There is nothing wrong with anyone. So did you just want to?
Right.
Yeah.
It's about, yeah, you know, we're, you know, in God's eyes, we're all gemstones. So
Exactly.
okay, so we're all perfect, except we're growing, and we're growing with our awareness of who we are. An old expression, you're either growing or dying.
That's
So,
the one, exactly.
The inner journey is where most of us go after focusing on the outer journey. So, okay, we've done money psychosis, and now money avoidance, money worshiping disorders. I'm interested in that because to me that's the world right now.
So again, those, and there's actually a few more. I just only limited on the two major ones that I see playing out in trading. So the money avoidance disorder is an unconscious strategy of rejecting and avoiding money. And who has not experienced making a really great profit and then giving it all back? Now, when I have a trader who typically has this kind of experience, then I look at their spending behavior. If there's someone who gets their pay or makes an income and then they go out and spend it straight away, I know they will repeat this behavior pattern in trading as well. And they have maybe some resentment towards money. So rather than getting rid of the resentment, they get rid of the money. So if you are someone who gets rid of your money in any way, shape, or form, look at what resentment is connected with it and then get rid of the resentment. Find your peace in whatever happened around money. And, you know, again, it's like with relationships, like with love in our hearts. Everybody has had some heartbreaking experiences around money. It's just, it's life, right? And so look at what was going on for us individually, for every trader. And look at, so we call it financial denial, where traders or people, they don't deal with their financial reality, where, you know, they're behind with their taxes. And, you know, we like to say, get your shite together, you know, get your financial reality together, open the letters, look at where you are late with your payments, where you pay late payments fees all the time. So that is really, if you have this area of your life not sorted, if that's messy, for you to perform at the highest level in your trading, which, let's be realistic about it, if you want to succeed in trading, we have to be the top 1% of the world, or let's say top 10%, right? Let's be generous, of the world. So that means we have to do everything that the 90% of people don't want to do. So the probability of succeeding is really little. And hence, if you are someone who has a messy financial area in your life, you need to clean that up. And then your probability of reaching the top 10% in your trading will increase tremendously.
So people could probably look at their workstation for their clues of whether they're in financial denial.
As well. So not just the workstation. So I am talking about not opening letters from the bank.
Right.
Not having that.
I mean, people did that after 08. They didn't want to open their brokerage statements, and after 2000, they wouldn't even open them. Yeah.
Exactly, because it's so painful, right?
Right. Feel the pain and do it anyway.
And do it anyway. Okay. Exactly. And that's the same pain that we experience when we have to take a loss. So if you want to train yourself to take a loss, how about start opening those letters? Just do everything that's just uncomfortable as well in your life outside of trading.
Okay.
So money avoidance is shows up in financial denial. That's what I was just talking about. In financial rejection, which is having guilt around having money. So I also have a few traders that I worked with who felt guilty because there's so much poverty in the world, and they felt that they take from someone else, which we know, and they consciously know is not true, but still was running them and was impacting their ability to perform in their trading and do what needs to be done. Yeah, then if you look at money worshipping, it's very interesting as well. So money worshipping are the ones who think that money is the solution to everything, where they say, if only I had more money, I would perform so much better, because if I had more money, then I would take my losses. If I had more money, then I would be able to put bigger trades on.
Right.
I always say, if you don't know how to turn $1,000 into $10,000, you will turn $100,000 into nothing. And we have seen that in people who have inheritances, people who have.
They didn't have to work for it.
Yeah.
So let me ask you this. Maybe it's good that people at some point in their life go through some hard times and can empathize with people that are going through hard times, so that when they experience good times, they can appreciate it, rather than silver spoon people where they always had it and probably can't empathize because they were never there, and they just look at poverty as being an eyesore. So maybe it's actually an advantage to have gone through the fire at some point in your life.
Yeah, I totally agree with you, Dale, and also out of my own experiences where, you know, I was doing really well, and then I did some stupid things, you know, going through some breakups, in relationship breakups, and then suddenly there was like, you know, fear, and there was nothing, and to having experienced that, and also, you know, having done really stupid things in trading as well. I believe makes me a better coach, because I actually know the pain of not having enough money, and I know the pain of doing stupid things in your trading and then having to deal with the consequences. So yes, I think it makes us better human beings, doesn't it? Someone who has.
Let's go from the pathological to the healthy profile of someone who's going to be has a healthy psychological background here.
Okay, so the financial psychological profiles of wealthy people. So I use the word wealthy, not rich, because I include it in having healthy relationships, good health, and so on. Yeah. Right. So the ones who experience stress, they have money ambivalence and cognitive dissonance. And the ones who are doing well, they have lower levels of money avoidance, surprise. Yeah. They don't have loss aversion. So if you look at Richard Branson, he doesn't say, oh, I don't have enough money coming in, let's cut cost. He says, oh, this is how he became big. He said, don't have enough money coming in, how can we expand? And that's written in his book, Screw It, Let's Do It. And so I borrowed that, where I look at something, let's say something simple like, I have to pay my phone bill, it's $100. I don't have $100 in my account right now. Rather than reducing my phone bill to $50 a month plan, I say, how can I expand? How can I grow as a person and make $100 every month additionally, rather than folding in, becoming smaller, and making less money. Yeah, and I love that, and I see wealthy people doing that. What is really interesting, I want to show you that. That is all, again, that's the work that Cons did. What they do is, so that's the traits of the wealthy that we can model. They have very high consciousness. They're very dependable, motivated, and act with self-discipline in the context of their work. Not always in all areas, but I see they do that in the context of their work, everything that they're passionate about. Sometimes they're not as dependable when it comes to their relationships, interesting enough. Like with their wives, they would say, I'm home for dinner at 6, and then they work till 10 o'clock. But, you know, when it comes to succeeding in their work, they're very dependable. Emotional stability. And here, this is the most interesting one, internal locus of control. When I ask them, how do you know you're doing a good job? They say, I just know. Or they have their own benchmarks. They don't need someone else to tell them that they have done a good job. And
okay,
also,
they don't have to be validated.
They don't have to be validated, exactly. I love how you put what I say into such beautiful words. And also what they do is they actually have, I don't have it here, they actually work with accountants, with bookkeepers, with coaches. They have professional people around them who have more knowledge than them. And that's the main difference between people who are less successful compared to people who are more successful, having the professionals around them. Interesting, huh? And that's all research-based.
People better than you.
Yeah, yeah. So so you know, we can go on and on. So here they engage professions such as accountants, bookkeepers, coaches, lawyers, mentors. When I see people who are not as wealthy, they avoid working with a lawyer to look at a contract, and they might lose everything afterwards because the contract was not watertight or was worded not for them but against them.
Okay. All right. Well,
Huh?
you know. Interesting. What do you want to wrap it with, Mandy?
I want to wrap it with this one. Money beliefs. People with money are not good or bad. They're just people with money. People without money are not good or bad. They're just people without money. You with lots of money, you're not good or bad. It's just you with lots of money. You with no money, you're not good or bad. It's just you with no money. Now here's the interesting bit. Guilt and fear lower our self-worth, and hence the money that we can make and keep will create guilt and fear and lower our self-worth. Total acceptance of money can remove the fear of not having it and the guilt of shame of having it. And so if you believe that people without money are good, you will have the guilt of having money. If you believe people with lots of money are bad, you will have the fear of having money. If you believe people without money are bad, you will have the fear of losing money. And if you believe people with lots of money are good, you will have the guilt of not having it. These two slides are the most important ones. I encourage everyone to really check in with yourself. And as you know, Dale, every trader, every successful trader has a dark past, and every losing trader has a bright future. So we can't go back and make a brand new start, but we can start from now and make a brand new ending.
That's beautiful, Mandy. I have the antithesis of everything you've talked about. What do you think about this? What good is happiness? It can't buy you money.
I love it.
What good is happiness? It can't buy you money. Mandy, thank you so much. How thoughtful.
Thank you for having me.
I'm so glad that we videotaped this, because this is a great tutorial. We had a few questions, like, you know, one was asking about Denise Shaw. And
I love Denise Shaw. I'm a big fan of her. She's awesome.
Someone was, someone said you have a golden heart. Someone was asking, so how do you change your paradigm? I don't, you know, someone who still helps me is I listen to a lot of Robert Proctor stuff. You know?
Yes, he's amazing.
and a little hypnosis here and there, and I listen to Mandy. So I recommend people follow you, Mandy, and if you'd like to show your website so that people know how to get there. And I had gotten some requests, people who couldn't remember your name, but asked me about you, and I hope they were able to find you. But really think that your work is a real positive. It's a candle in the dark world of trading. So
thank you so much, Dale. And the same goes to you to invite so many traders to speak on your show. That's so generous of you. And yeah, I think we had this conversation that the work that we're doing is so bigger than us. It's not just about running a business and making money. It's really helping to make this world a better place, because I don't know about you, but I work with a lot of traders who lose a shitload of money, and I have resentments against brokers who have all this money pocketed. So, you know.
Right, yeah. Let's keep up the good fight.
Exactly. On that note, bedtime for me, guys.
Okay. Thank you, Mandy. Thank you very much, and Happy New Year to you, and happy holidays to you, and a great 2018 to you and all your mentees.
Thank you, and the same right back at you.
Thanks, Mandy. Adios.
Bye.
See ya. All right, that was Mandy. Hope you enjoyed it, everybody. So tomorrow's investing.com Thursday. Have another great interview. I'm not going to tell you who it is, so you'll have to show up. And let's wrap it with don't just count your pips, count your blessings, and see everyone tomorrow. Adios, my trading warrior brothers and sisters.